You are listening to chartingwealth.com for Friday, the 17th of July, 2015. What are we looking at here? Well, we can see over the last three candles, which each candle represents 2 days, we have a big drive up in IYY, which is the total market. This is an index. It is an exchange-traded fund that reflects what's going on overall. We have a 2-day trend line, and we drew that on the first 2 days of the up move, and today's move was even further up. It's blasted through the 30 and the 34 moving linear regression lines, and we have a crossover today. That is, when I say today, I'm talking about Thursday, the 16th of July. We have a crossover moving up on the 2-day chart, so now we have a confirmed up market. If we back out from the 2-day chart to the 4-hour half-day chart, you can see where that little blip yesterday afternoon, where the market moved down a little bit in the afternoon, was totally made up for as the market continued to move up. We have a crossover going up back on the 9th, coming into the 10th of July, and we have seen 1, 2, 3, 4, 5, 6, 7, 8, 9 up moves of the half-day chart, which of course reflects right at 5 days. Now, we can see that the derivative oscillator is losing a little bit of its speed over the last couple of days. That means that the move up is not oscillating quite as highly as it was. The big indicator we look at is, of course, the MACD and the signal line, the moving average convergence divergence, which is the blue line on the bottom of the chart, and the red line. For those of you listening, I'll do my best to explain what we're seeing. We're seeing it continuing to move up, which means that the short chart is in a continued up move. Now, you might say, well, we just had the big chart crossover going up, so now we could get into the move, right? Well, here's how we play this. Again, we don't just jump in any time that there's a crossover. We want to wait for a crossover to occur. Now, wait a second. We could have had all this movement that we saw starting back on the 13th. You could also have done the same thing unbeknownst to you on the 23rd of June and then watched you lose everything as the market rocketed down. So what do we look for? Well, we've crossed over going up now on the MACD. We see the up movement and the surge. We're going to now look for the 4-hour chart to roll back. And then once it starts a confirmed up move again, that is when you can most safely enter into your virtual trade. Why do we say virtual trade? Because we're not giving you trading advice. We're talking about virtual trades here. Once you do enough virtual trades and you become enough of an expert, you can make your own decisions. But again, we're an education company. We are not a stock calling service. Always try to make sure that I give those parameters, and we have them all over the website. So we're, of course, above the 2-day trend line on the 4-hour half-day chart, and we are looking for a rollback so we can find a good position to get in and make money on the up move. Now, let's go back to our 2-day chart, and let's look at SPY, which is Standard & Poor's 500. We can see we don't need this line anymore, do we? Well, this is how easy freestockcharts.com is. Presto, bingo, we just redrew our trend line. Not quite a perfect trend line because it really should be connected probably further down about here. So what we've done, for those of you just listening on audio, we connected a 2-day uptrend line with the candle on the 13th and then the candle on the 15th. And we see that today's candle moved up substantially, and again, we're looking at 2-day candles. For the record, the Standard & Poor's 500 was up 0.79% today. The total market up 0.18%, and again, we're not even 1%. But that's what it's up today. You can see the derivative oscillator flipped over on the 2-day chart right about the same time that the MACD flipped over. That is always good to see. You like to see that. The more in sync the MACD and the derivative oscillator are, the more positive you feel about the move. So we have a confirmed uptrend on both the total market and on the SPY. If we look back at the 4-hour half-day chart on the SPY, we can see that it zoomed up this morning, reset a little bit at around lunchtime and then moved on up. The total move, like we said on SPY, was 0.79%. Derivative oscillators are losing a little bit of its up move, probably due in part to the movement down yesterday afternoon, that is Wednesday the 15th in the afternoon. But the moves throughout the day on Thursday were up. That's where we're getting into on the market as it will open on Friday morning, the 17th of July. Now, let's go back out to our 2-day chart and let's take a look at the Qs, my favorite chart, QQQ. What is that? Well, that is the NASDAQ 100 tech stocks. What have they done? Well, we're going to redraw our trend line on this one too. Get a little bit better trend line there. Still, we don't have 3 candles connected. We have 2. The surge up today jumped out over where the trend line would otherwise have started it. It's actually pushed up through. Now, this is interesting. The Qs has actually moved up through the Bollinger Band. What does that mean we want to look for popping up next? We might want to keep our eye open if there's a big down movement over the next couple of days. Once this candle closes and a new candle opens, if we see a red candle starting where the green candle ends, that is a tweezer top. You can find that at our website, chartingwealth.com. Go in there and search for tweezer tops. Tweezer tops are just something you always look for as an investor, as a trader. If you see the market turn over and move down at the same level that it topped out at, that is an indicator that experts will tell you is very accurate in helping you determine a down move in the market. So just keep an eye out for that on the 2-day candle. You see something like that, pay attention. Haven't seen anything like that yet. We see a very similar pattern as we saw on the SPY, crossover going up on the MACD along with the derivative oscillator switching over about the same time. Confirmed up moves, of course, on the Qs. If we look at the 4-hour chart, we will see, of course, again, surging up throughout the course of the day. However, the derivative oscillator did lose a little bit of its energy, again, probably due to the down movement on the afternoon of Wednesday, the 15th of July. So we have confirmed up moves. All the movement is above the 2-day trend line. And again, if you are looking to get into a virtual trade, you want to wait until the Qs rolls over and then makes a confirmed up move again on the half day, the 4-hour chart. That's going to be your safest time to try to figure out when to get in. So we do have confirmed up moves on all the indexes. Now let's go back. Lastly, we will look at gold as we always do. We're going back to the 2-day chart. And look at gold, such a beautiful downstroke. If you were in an inverse fund on gold, you would be a happy camper since we called its rotating over back on between the 19th and the 23rd. The 23rd when gold rolled over. We have a beautiful trend line connecting 1, 2, 3, 4, 5, at least 5 candles. 10 days worth of down movement, although it's a lot more than 10 days. It's been going down since the 23rd all the way through today, reaching the bottom of the Bollinger Band right now. Derivative oscillators continue to heat up, and we just have a perfect down moving chart in gold. So continue to pay attention to that. It was down officially for the day 0.36%, just a little over 1/3%. Now let's look at the 4-hour chart. Well, you can see gold may be getting a little long in the tooth, something we always look for. Look where gold has bottomed the last few days. Right around the same area, right at 109.67 or so. Gold has bottomed about there. What does that mean? Well, it could mean that gold is reaching a bottom. We don't know that yet. We have a confirmed down move, of course, in the 4-hour chart. But if we start seeing this bottom out, derivative oscillators continuing to move down, however, as is the MACD continuing to get larger. But when we start looking at price movement itself, pay attention to that. Whenever you see bottoms forming, could be a level of resistance where gold might not go below that. So pay attention to that. I'm ranging back to see if I see, if we go back, there we go. We're going all the way back to March 17 or so, right around mid-March 2015. Looks like gold bottomed out about there. and then started moving up again. That could be a hard point for gold. That's what's so cool about using charts and looking back. You can find historic levels of resistance to either up moves or down moves. So mark that in your trading notebook and pay attention. If you like to pay attention to gold and want to look at a potential good buy point, it may bottom out here and move up. Gold is in a confirmed down move on both the 4-hour and the 2-day chart, and all three of our indexes, the Qs, that is the NASDAQ 100, SPY, and the IYY, the total market, are in confirmed up moves on both the 4-hour, the half-day, and the 2-day chart. Thank you so much for joining us at chartingwealth.com. We appreciate you being with us every day. Be sure to follow us on Facebook and Twitter. And guess what? We just started an Instagram account, so join us there at Charting Wealth. We so much appreciate you being with us. We love your comments, questions, concerns. Please stay in touch, and we wish you the best in the markets from chartingwealth.com.